Good afternoon. I'm Doug Kreviazuk and the moderator for today's afternoon session. Now, when I look around the room, because I've been around CPA a long time, I see a lot of familiar faces, and I can honestly tell you that we have a diverse audience. We have financial institutions, stakeholders, service providers, et cetera, in the room. And when I think about this one question about, I'd love to know what you think when you first heard Canada is going to modernize its payment system. Did you think about, oh my God, what's it going to cost? Some people in the room thought that. Some would have thought, that's a great opportunity, my business can actually contribute to that. Or did you really think about what the ultimate benefits that would accrue to users in the payment system? When you think about payment systems, they are but a process or an input cost to some other final output. And that final output, like any other commodity, is bought and sold in the marketplace. So in essence, don't we all pay for enhancements to infrastructure in one way, shape, or form? And equally, don't we all benefit in all of that? Today's marketplace is uber competitive, and I mean that pun intended. And many of the players providing payment-related services are to businesses, consumers, governments, corporations, have never been so many and, to that degree, so intense as it is today. So technology really has brought about much of this change, but these changes would not have occurred if it were not for the gaps or the unfulfilled gaps or the unfulfilled demand that exists in today's economy. At the same time, financial regulation has in fact been slow to respond to the changing marketplace. And maybe this is due in part to the fact that risk of these somewhat small players is viewed by the regulator as not as important as the efficiency trade-offs that will result from new products and services that will accrue into the marketplace. But as we've seen, the pace of innovation is exponential. And if you saw those discussions this morning from Daniel and a few others, you have to believe that the pace of innovation is dramatic. And when you think about it, the rise of those number of firms on the Fortune 500 list that were not there even 2 years ago is astronomical. So I ask myself, can the risks be that far behind? So when you consider the increased competitive marketplace, the implications to traditional regulations, and the cost of installing a new payment system for a national economy, it's not surprising that there needs to be a positive value add, not only for the economy, but for those that have to invest in the development of these infrastructures. When you think about it anecdotally, there are systems out there that have exceeded all expectations, like Sweden. And then there's some that maybe David will talk about, like Japan, that have not done nearly as well as they could or should have. So clearly this is a very large issue for Payments Canada. So I'm hopeful today that David will share with us his insights into how these new infrastructures drive usage and drive opportunities to financial institutions. So today we are joined by David Chase. David has been with Dovetail since 2008 and subsequently led the development and management of Dovetail products. He spent almost 30 years in the industry. He's an experienced payments professional, recognized thought leader with significant global strategy, business and solution development background. He's a regular participant at conferences and working groups, and his experience includes senior roles in corporate cash management, middleware, real-time payments, including financial institutions in the development of the strategy for UK faster payments. But David's focus now is on ensuring that solutions remain at the forefront of financial service technology innovation. David brings with him a BSc in geography from Manchester, England. Please join me in welcoming David here this afternoon.
Thank you. Yes, when you look back and you hear that you've been in the industry for almost 30 years, you think 30 years. And it's true, the level of change I've not seen in that 30-year period. we are rushing forward, and again, the pun is intended, rushing forward into things like the real-time payments environment. And I think what I wanted to do this afternoon was just spend a bit of time looking at the experiences that I've had on a global basis, looking at the real-time systems, looking at the things that have worked, and looking at some of the issues that have arisen because of the need to move to real time. Looking at where I think we'll be going from what I've seen in terms of the direction. I think one of the greatest parts of my role at Dovetail is that strategy, looking at where the world is moving, helping the world to move forward over the next sort of 3, 5, 10 years, and how we're seeing consolidation of all of the different payment rails, all the way from sort of the traditional high value through ACH, even into the card space, into a focus on the clearing rail and the two types of settlement. So what I wanted to do was really just take a step back, have a look at some of the real-time systems in the world, and talk about some of the key drivers that we've seen. So really starting off in terms of collaboration. You know, when we talk about collaboration, we shouldn't just look at how we as an organization, as an environment work together, and look at how we collaborate both internally within a bank, but also with innovators, with the regulators. What we're seeing in terms of collaboration sometimes means that we get the lowest common denominator. If you look at SEPA Inst, it's probably not the best way to put together a real-time payment system. We've chosen the lowest common denominator in terms of the limits. You know, in terms of the time, we're going for 10 seconds. We're going to expect a 25-second end-to-end environment. In a real-time environment, that's just not good enough. You know, we need to get it down to 1, 2 seconds, because if we look at some of the use cases, the way we've seen real-time payments used in the UK, a person-to-person payment has to be almost instantaneous. We can't wait 10 seconds waiting at a point of sale terminal for that transaction to go through. I know there's a few Americans in the audience, and I've heard how much pain has been caused by EMV operations taking 10, 12, 14 seconds at a point of sale. I stand up and talk about real-time payments moving away from the card rails to push credit transfers at point of sale. For that to happen, that has to be down at the second and sub-second level for it to work through. So yes, you know, collaboration there across regions is looking at the lowest common denominator. If you turn it around, if you look at the Dutch market or the UK market, where there are 1 or 2 or 3 or 4 major players who are actually collaborating together and putting forward a better scheme, they are talking about now bringing that down to less than a second. I do a payment to my taxi driver through my mobile device as a push credit transfer. That's sub-second at the sort of times that we get out of a taxi after a late plane ride. And he gets a notification within that sub-second. That's how quick instant payments can be if there is a level of collaboration. We also shouldn't forget about collaboration within the organization. You know, one of the questions that I'm always asked when I talk about real-time payments is, what is the use case? What are the benefits from it? And we'll split those use cases down into P2P and business to consumer or business to business. Very rarely do we start talking about those two operating hand in hand. And I think that, from an organization, a banking perspective, is where the driver has to be, because we are seeing the coming together, the consolidation of those payment types into the real-time environment. And if we don't look at those real-time as a sort of almost a single payment track that can carry person-to-person transactions as well as business to consumer and consumer to business, and all of the data, we are going to end up with siloed systems. We will end up with separate schemes, and we won't be able to see a lot of the benefits. I think faster payments in the UK, driven through the vocal link, is really showing how those different types of payment, as we saw in the past, are starting to come together on that single pipe. You know, we are seeing some benefits and cost benefits of moving some of the ACH traffic into the instant world, because a lot of that ACH traffic happens outside of the normal hours where we want to see the bulk of the instant payments. And we are looking at sort of sub-second or sub-2-second responses. So we've put a huge investment in terms of the infrastructure, the supporting operations teams that can carry that additional payload in the quieter periods. So consolidation is not just between the banks, the financial institutions, or the regulators. It's internally as well. The corporate side of the business, the wholesale side of the business, the retail side of the business, all coming together. And we've started to see around the world some of the forward-thinking financial institutions creating things like payment councils, looking at how they're going to take advantage of these new payment types or new transaction rails for the whole benefit of the organization. We also should look at how do we get collaboration between what we've sort of nominally called innovators and the traditional banks, and how can we support some of the overlay services, the TransferWises, the Ripples, the Vimos, who actually sit on top of the payments infrastructure that we've put in, the supporting structures around the hard parts, the regulations around the accounts and the movement, the trust relationships that you have with the customers, and how they can take advantage, and how you don't get disintermediated between collaborating and giving business and giving revenue to some of these organizations while still trying to maintain a collaborative approach. We've seen two ways of that happening. You know, if you look at the TransferWise model, if you look at the aggregator services in faster payments in the UK, we're seeing some of the very small financial institutions who have direct access offering settlement services, offering their central bank account to help provide liquidity to some of these overlay services. And that's a way of collaborating and generating new revenue streams as well. So it's not just a case of these guys are coming in and trying to reduce the revenue or reduce the cost of those transactions. It's how can we create an ecosystem around the services that they have. Daniel this morning made a really good point in the fact that these guys, the difference is that they can produce an environment in which failure is as good a learning experience as success. Learning from the failure, being able to quickly run round their life cycle in terms of learning and quickly learning from failure. How many times could I stand up and say to a bank, well, you can actually fail? Well, you can't. So it's how do we collaborate, creating those environments, learning and then monetizing those types of innovation. Barclays in the UK, HSBC, have really caught on to that way of working by separating those into sort of innovation labs or innovation farms and pulling those services back in and monetizing it as well. Certainly around the cash management, the ping it type transactions that sit on top of the real-time payments. I think one of the other sides is in terms of operational support. So we look at the number of operators who are going to be offering real-time payment services. So as a European, I'll stand up, I'll talk about SCT, SEPA credit transfers, a single euro payment area credit transfer, Inst. And this is, I should have the ability to create one of those and send it to any beneficiary who has a euro account in the EEA within 10 seconds. So what are we seeing? We're seeing domestic operators coming up and offering domestic schemes which are tied directly into the domestic market. So I talked about the Dutch model, moving from a separate Inst scheme that is has a goal of 10 seconds, but in reality will be between sort of 15 and 20 seconds with a limit of 10,000 euros into a Dutch market driven by 2 banks in the Dutch market collaborating, which is sub 2 seconds and no payment limits. So if you are a European bank, you have to be able to work in the domestic as well as the regional. And of course, we talk about SEPA Inst as a scheme, but the business rules, the funding rules will be fundamentally different between making a payment domestically and making a payment internationally. And those operators will focus on different areas. So we will have operators focusing on the retail market. If you look in the German market, doing a push credit transfer at point of sale is the goal. They're not card driven. They want to move away from that model. They're at the moment the direct debit driven, but they want to move back into a push CT to move away from merchant service fees. And that means that they have to have a different level of service. If I'm an operator, I'm a European bank, I now have to work with multiple operators. And I think, just sort of finishing off on this section, one of the issues when I stand up and talk outside of the UK is that the focus is on the instant side. You've all heard me. I've been talking about 10 seconds. I've been talking about sub-seconds. I've been talking about 2 seconds. What we do forget about is the 24/7. That's where the real benefit is for corporates, and we're seeing a lot of that benefit taken up in the UK by completely changing supply line management, by changing the way Treasury works within an organisation. But there's a downside of that in that a lot of those organisations are not open 24/7. So it's all well and good me saying we're going to put together a use case which is consumer to business, being able to do an instant payment 24 hours a day, but the corporate has to come along with that and change the way that they operate in terms of maybe picking up a reconciliation report on the Monday morning and back valuing in terms of their Treasury systems that the payment was made at that point in time. We do see multiple liquidity models, and I think one of the huge changes we've seen is that some of the smaller organisations, smaller banks, have seen this as a key benefit to their revenue streams by being able to offer that liquidity within the settlement cycles. But of course their problem is now having to manage that liquidity position across multiple agents in real time in a period of time. And we're seeing a huge amount of pressure now on the central banks to at least open up 7 days a week, if not 24/7.
Thank you, David. Now we've got a few questions for you.
Thank you.
So when I think it seems only a couple of years ago, it was all the rage, or the holy grail was speed of payment, right? Everybody was focused in on that. But the tone seems to have changed, and increasingly we are talking about the importance of data. So from a financial institution's perspective, will their business case be built around speed or some combination of speed with data?
Yeah, I think speed has become hygiene. We have to accept everything now happens at speed. And it's really then, where can I drive revenue? Where can I drive value to the customers? And I think that really is around the data. And the two forms of data, the data that I can pass between the two participants to improve the service, to improve the reconciliation of those transactions. I talk a lot about, let's forget about the transaction. We're moved away from the transaction into what is the service that's being provided. How can I price a service rather than a transaction? And that's really down to the data. How do I reconcile an invoice? I make a payment. How do I make sure that that payment is tied to that item that that individual has purchased? And that's the sort of the transaction information. Add to that the request type transaction informations, the request for payment. And now I can send a request for payment to a retail customer, which is almost, here's the list of items you've bought. Do you want to pay for those? Well, oh gosh, yes, of course I do. ting, forget about it. That's a huge benefit to me because that's the information flows. You've all seen I've got an Apple Watch. I thought I would be using Apple Pay all the time. And I don't. And the one reason, there's no big data flow that goes along. It's on the card rails. As soon as this moves into the ISO 222 world and the normal payment systems, I'll go with some of my colleagues to get a coffee. Get a coffee, yeah, okay, you all know me. Get a coffee, I go to pay the bill, I'll wave my watch. That invoice will then be sent directly to my company into the expense system to generate an expense report. That's the sort of value of information flows. I buy an item and all of a sudden that invoice or that receipt gets sent to my wife because she does all that cash management. So she knows that that payment's gone through and it's put onto the server we have at home so that we've got that record of that purchase. So that's the transactional data. And then we get into what was normally called big data. You'll know me, I'm not a big fan of big data, collecting all the data just for the sake of collecting data. But I'm really a big fan of collecting normalized, domain-specific data because that's where the real value, understanding why that transaction took place, what the touch points of that is, and how I can sell that aggregated data back to either change behavior or to act as a source of data and revenue.
Okay, great. Let's change it up a little bit and talk about settlement. I think that there is generally some degree of confusion between real-time payments and real-time settlement. From the CPA, or the Payments Canada, my mistake, another dollar in the jar. From Payments Canada's perspective, we really are looking at it from a funds availability point of view. I think when you think about the reality, central banks do not want to operate from a 724, 365 perspective. So what are the types of models that are starting to develop or are efficient in the marketplace that can support a 724 payment system, but not necessarily a 724 settlement system?
Yeah, I think settlement causes a lot of confusion. And it's the word. I think you're right. If we look at an instant payment scheme, the definition is that value moves from me to you within a very short period of time, and you have availability of those funds. That is totally separate from how we do interbank settlement. And I think what we're seeing are two models. We're seeing the Australian model where everything is settled in real time. And we're seeing a sort of deferred settlement model in almost the rest of the world. The clearinghouse is sort of a pseudo real time based on the CHIPS liquidity model. I think it's very, very important to understand the risk. I do think there's value in having two settlement methods. One, gross settlement in real time, the other, net settlement, to manage the bank's liquidity position. And I think the decision has to be made in terms of the risk of that individual transaction. And that could be a risk in terms of the market, it could be a systemic risk to the bank, it may be an individual risk to that customer making that payment in time. And I think we should have the flexibility from a business perspective to be able to make that decision on a transaction by transaction basis. So we've seen two forms of the net deferred settlement. One based on collateral. And so the UK started with a collateral based deferred settlement, and we're moving rapidly to a cash pre-funded. And the reason for that is to actually open up the market. Collateral is very expensive, and it's even more expensive for small organizations with a very small balance sheet to find enough collateral to actually play. And so to open up the market, it's based on a pre-funding based on their actual transaction flows rather than on the sort of collateral positions. And I think we'll see more of that move to pre-funded net settlement for the sort of transactions, the bulk of transactions that will flow through a real-time payment system, but also have the ability to move that into gross settlement. And I think we will, over the next sort of 5 or 10 years, see that move out of the traditional domestic borders into the cross-border world as well, that we will see the central banks, certainly in the core hub currencies, opening up 24/7. I don't think we'll have an option. As I say, we're starting to see that in Europe with the Dutch central bank pushing hard, or being pushed hard to be open up because there will be no transaction limits, and so I need to change my pre-funded position on a regular basis. We will see a move to that, and yeah, it's a difficult position. I don't think the Australian model where everything is settled gross is the right, because we're moving from a position of liquidity to a position of actually now I've potentially got queuing in an instant payment system which is 2 seconds or less end to end, because I have to make sure that my liquidity position can cover that transaction in the flow itself.
Thank you. So when I think about payments, many describe payments more as it's becoming commoditized. They're undifferentiated within the marketplace, and obviously we know that this is a volume business. From your perspective, what do you think are the supporting features in the payment ecosystem that will enable traditional payment providers to find and unlock value?
That's an interesting question. I guess if we look at the core, I started talking about innovation and where those innovators are playing in that sort of overlay service. Why are they playing in that service? Is because of regulation, and the other side of it is trust. We've all been through the financial issues over the last sort of, I was going to say few years, 2008, nearly 8 years now. One thing that financial institutions still have is trust. If you didn't have trust, you wouldn't have the balance sheet, you wouldn't have my savings, I don't have a lot of those. You wouldn't get my salaries paid in month after month because you are a trust. And that is where I think the value proposition is how do you provide and support the various third-party payment providers, the overlay payment providers, by building on the fact that you have a highly regulated and a highly trusted environment. So looking at the services that can be offered, to how do you support the Uber? We heard this morning, and Uber's always used as the great, I don't talk about payments because I just have a service. It all happens in the background. My kids go out and they go out and they pay for the drinks or they pay for the food. They're not thinking about the payment part. It's we had some drinks, we had that. And it's how do we build value propositions on that? We talked about information. I think that is going to be the key part of those flows, and how we manage and how we protect those in terms of those revenue. It's going to be a very difficult 3, 5, 10-year trend. We did talk about the speed that payments have changed or are changing. We are getting consolidation, but use that consolidation. Look at the products that can be offered around it. I stand up a lot and talk about, the death of credit card transactions or credit debit transactions. That's not the death of a credit card account. That funding account still works in a push credit transfer environment. It's just the rails have changed. It's just the proposition to the merchant acquirers that's changed. I can still have an account that allows debit, that allows a interest-free loan to be taken away from it, that allows some of the benefits around loyalty points and those. You are trusted to be able to provide and support that type of environment. That's where you need to sort of really focus on.
Okay, great. I've got a couple more questions, but I'd like to open it up to the audience before we do run out of time. Is there anybody in the audience that has a question for David? Come on, don't be bashful. Well, while you're thinking about it, because I'll pick on somebody that I know in the audience, we heard a little bit this morning, blockchain. blockchain continues to rear its head. There doesn't seem, at least at this point in time, that perfect application in the payment space. In your view, when you look around the global environment, what are the key opportunities for an application in the blockchain environment?
Personally, I don't think there's a great drive in the payments part. You know, it's an interesting technology. The whole DLT is interesting in terms of what it could do, what the potential are. Is it ready for mainstream payments today? No. You know, there are some major issues that need to be resolved around the governance, around the standards. You know, there are multiple DLTs out there, none of them that interoperate. Things like identification. Yeah, let's all take a sort of step back and think about it. You know, what happens when something goes wrong? I pick the phone up, I talk to my bank and say, look, something's gone wrong, sort it out for me. In a distributed environment, well, who do I talk to? You know, how do I get that governance? The regulations, you know, we do talk about AML, we do talk about, you know, the fraud, the sanctions check. You know, these are not things that can be opened out quickly into a distributed world. However, we can take some of that learning. We can use some of the concepts around DLTs. If you look at the UK regulators, we're working together on how we put forward the future of payments in the UK. It is a single clearing channel with 2 payment rails. And how does that operate? It's going to operate in a distributed operator environment. So distributed operator with that whole circle of regulations around it. Blockchain has some interesting value to add in terms of things like supplier chain management for managing the audit trail of assets through. Will it work in the payments? No, because we've actually solved a lot of those problems around identity, around governance, around regulations. You know, how did we solve it? We've got central clearing and settlement mechanisms to support that. Have we got a major issue that those fail? No. We've got some, you know, interesting problems around the edge to solve those. We want to get more transparency. So, you know, cross-border payments, we hear a lot in the industry about transparency. The SWIFT GPII initiative is providing that level of transparency by opening up the SWIFT network to allow people to go in and look at where payments are, look at the fees, the costs that have been put onto that payment in real time. That does not need a blockchain to provide and solve those sort of problems. Yeah, I think it's interesting. We've played with blockchains and distributed ledgers. It is in the payment space a solution looking for a problem to solve that we've already resolved. Will that change over the next 5-10 years? Yes, but then again, that whole technology will have sort of moved forward in that space as well.
Great. Any questions out there yet? Yes.
Yeah, we've seen it certainly in the UK. Faster payments being sort of one of the old real-time systems. A lot of the payments in the corporate space have really changed the way that they think. So we are, you know, simple things like cut-offs at sort of 10 o'clock in the morning today for value tomorrow have gone. You know, we're seeing corporates looking at some of their supplier payments moving up until 6, 7 o'clock at night. Consequential payments, you know, I'll make a payment once I've received another payment in. Those change and they're starting to run over a larger window. I'm not going to say 24/7 window, but more from sort of 7 in the morning to 7, 8 o'clock, 9 o'clock at night. In the real estate, I mean, there's a really interesting model where we have sort of realtors who look after people who want to loan out their house rental. They'll collect that rental income during the day and then make a single payment same day, sort of 8, 9 o'clock at night, to the homeowner or the estate owner, so that they're still getting value today, and then they're paying on their fees and their payments once they've received those payments in. Into the insurance world, we're seeing quite a model change in insurance. At the moment, insurers take quite a risk. I'll phone up at 8 o'clock at night and take out insurance on my house, on my car. And if I use a debit or a credit card, those won't actually settle for maybe a day or 2 days. And if it's a weekend, maybe 3 days. And so they're taking risks that, I claim on that insurance first thing in the morning and then cancel that card. And that's a big fraud model in Italy that's now being addressed by the fact that they can do an instant payment and have instant value. And it means that they can change their models as well, reduce the cost that they charge me for that type of payment model, not because of the transaction cost, but on the subsequent cost that transaction may have failed, or I may not have given them the full amount before I'm actually taking away from it. We're seeing a bit in Europe around healthcare and being able to use the information to amalgamate a really complex payment chain between the doctor, the pharmacy, the hospitals, and actually being able to pull all of that information together and link all those payments into one, and therefore have a really significant reduction in the reconciliation at the healthcare costs. So we are seeing quite interesting models. And I was one of the last people to stand up and say, if you build it, it'll be used. But I think, as my sort of colleagues at VOCA show, the number of use cases is just exponential, and they're not some of the things that we could actually see. And a lot of it is in that corporate space. And again, more of it around information and the opening up of the availability window rather than just the instant speed of it. And I think, we mustn't forget that side of it and focus only on the instant side.
Okay, great. I know we're just about out of time, but I want to put one last question in. We continue to be pursued by this question about access to the core clearing and settlement system by entities that are not what I'll call the regulated traditional regulated financial institution. From your experience on a global basis, are you seeing openings for these types of players directly in the system, and if so, under what conditions?
Yes, I mean, the UK is probably the best example. Up until very recently, it was, I've got to be careful if there's any UK major banks, a closed shop. It was very difficult to gain access, and not from just a technology perspective, but a Bank of England risk perspective. You had to put a huge amount of collateral. We've tried to open up the market. There's a new access model that makes it a lot easier to gain access in. We still have a very difficult model for access from the regulator's perspective. So although a lot of work has been done from a lot of the financial institutions, from a lot of the vendors, as well as the core scheme itself, there is still a reticence to open it up. And again, it's systemic risk. What is the level of risk that market is taking on because it's a deferred net settlement? And I think that's where we've seen a lot of opportunities from some of the, maybe not mainstream banks, but to offer their liquidity, their settlement position, to make it easier for those organizations to come into it. I'm not one that says we should regulate differently for smaller organizations as opposed to a big organization. If I've got my money in a small organization, I want that organization to be monitored and to be regulated just as tightly as if I've got my money with a huge organization. They may offer me a better service, a better customer experience, but I still want that level of regulation. So we must still balance those two.
So foundationally, you need the regulation in place first before the access. Okay.
But as I say, I think open access is definitely where we need to get to. It's just how we manage that. So from a technology perspective, I think we can do that quite quickly. It's that regulator perspective and the settlement and the liquidity that has to run hand in hand with that.
Okay, great. Are there any last questions from the audience before we wrap up? Hearing none, seeing none. I'd like to first thank David very much for the presentation here today. And I'd also like to thank you for attending this session, and please enjoy the rest of Payments Canada's conference.